the mutual fund data, and that's what markets will have a close eye on.
Oh yes, so a lot happened in the month of August as well. But for now, we've got the first number, which is the net equity inflows, which have been higher than the month of July. It has come in at 38,212 crore rupees, which compares with a number of 37,082 crore rupees. Remember, we had a record high number in the month of June at 40,573 crore rupees. Very important to track here will be what the flows have come in from the NFOs this time, because we did have a lot of them in the month of August as well, be it the tourism fund that came in from Kotak, be it the other ones, and that's something that could have contributed to the kind of flows that we are seeing as well. Large cap fund inflows, look at that, because large caps did perform very well. We have an inflow of 2,636 crore rupees, which compares with an inflow that we saw the month gone by at 670 crore rupees. In fact, this is the highest number that we have seen in since last June, definitely since last June. June 2023 saw a net outflow of 2,000 crore rupees, and since then we've been hovering around those levels only, and then there was an improvement in flows. So definitely that's the big number to watch out for. What have we seen in terms of big inflow in the large cap space? Around 2,600 crore rupees, and that is the bar that should come up for you on the screen, the large cap flows, because that has seen a big increase. This 2,600 number we've not seen in a long time. So as I said, it is at a multi-month high, and that is the big takeaway, because Vivek, we've been talking about how small caps and mid caps have been doing well, large caps were still lagging, and a monthly number of 600 to 700 crore rupees, nobody would have actually seen that. So the August number is, of course, it's a big bar there. Our producer should just change that. It is the latest number. The August one should be around 2,600 crore rupees.
So run rate of 600 to 700, and it's now spiked up significantly.
It's spiked up significantly.
So it looks like, everyone's been watching us, everyone's been telling us, to maybe take some profits off the table as far as the small cap and mid cap.
So that's why the small cap and mid cap number will be very important to track as well. I'll have to check the number for now, but yes, that is the next big number that we'll be watching out for. And I do have the August number. It's just that it's such a huge huge data that is given. So there you go. Just look at the increase that we've seen, Vivek. April it was just 400 crore rupees. May it increased. June, people thought that maybe with the market run-up we saw post-elections, large caps would have contributed.
So they haven't moved out of equity, they've stayed with equity, but it's more of a flight to safety.
Yes, exactly.
They see more comfort as far as the large cap space is concerned. What else will we watching out for as far as this particular equity inflow or the mutual fund data is concerned? Number one, SIP numbers monthly have stayed very steady about the 20,000 crore mark. Now, it'll be important to see whether, given the fact that we saw very volatile last couple of months, whether that sustains. The other important numbers to be seen, and something that the market will watch out for very closely, is the kind of activity as far as the mid cap as well as the small cap fund is concerned. And Sonal, like you mentioned, there were a lot of NFOs,
yes.
There was a tourism fund that came out. So there also you did see very significant subscriptions.
So we have the data here as well for the new schemes. By the way, we have the data for the mid caps and the small caps. Mid caps this time around have seen over 3,000 crore of flows that have come by. So mid cap funds around 3,054 crore rupees. Small cap funds have come in around 3,200 crore rupees. So that also continues to be the case, where we have seen an improvement in numbers. So last time around, we saw mid cap funds sees inflows of 1,644 crore rupees and small cap see inflows of 2,100 crore rupees. So it's not only actually large caps, even mid and small caps have done really well. In fact, we have some guests joining us now. Manish Mehta from Kotak Mahindra Asset Management is joining in. Mr. Mehta, good afternoon. Thank you so much for joining in. But definitely the big number is that big bump up that we've seen in large cap funds. Surprisingly, even mid caps and small caps have seen an improvement. What is the trend that you are seeing here? And do you think this is something which would sustain going forward as well, that confidence that has come back in large caps?
No, so in fact, if you hear the commentary, most of the fund houses and even at Kotak Mutual Fund, I think from a valuation point of view, we've been, sort of going out and telling at least the advisors and clients also that, large caps is probably where one should probably look at allocating new money. And either in the form of large cap funds or in the form of flexi cap or multi cap, where bias is more towards large cap, is where we've been seeing most of the flows that have been coming at the industry level.
Thanks so much for that, Manish, and thanks for joining us. We also have Akhil Chaturvedi, who's joining us. Good afternoon, Akhil. Thank you so much for joining us. First up, we asked Manish as well, what is your view as far as the sharp inflow that you've seen in the large cap fund space? And secondly, do you see inflows moderating as far as the mid-cap and small-cap space is concerned, what is it that distributors have been advising clients in terms of, maybe valuations being stretched in that particular segment of the market?
No, yeah, so absolutely right. I agree with Manish also that incrementally all of us in the industry, AMCs as well as distributors, we are suggesting to investors to move more towards large caps or flexi cap funds where the large cap allocations are higher. I think that is also reflecting in the numbers. So if you see, there is a divided house between multi cap, large cap, small cap, so all in the range of 2.5 to 3,500 crores. So it's a good balance across all categories. I think that's a good development, and I think the sectoral funds continue to do very well. I think it's more to do with the NFOs. So that's 18,000 crores. So still a very large pool of allocation going out there.
Right. In fact, this time around in the month of August, there have been 18 NFOs, the number of schemes that were launched, new schemes, and that garnered around 13,815 crore rupees. That's the data from AMFI. And if we just talk about the sectoral funds here, even that, as you said, has done well. It's around 18,117 crore rupees. But does that not warrant some caution? Because a lot of that money is coming from NFOs. And as you said, some of these sectors have already run up. So don't you think that is a space that investors should be a little wary of?
No, so I think, broadly the way, there are opportunities in the market. Of course, the core allocation always should be around diversified funds, which are multi-cap, flexi-cap kind of opportunities. But through NFOs, there are these niche opportunities where there's a good growth opportunity from next 3 to 5 year perspective. Investors are also, a lot more aware and depending on their risk appetite, they tend to take allocations towards certain themes or certain sectors. So I believe that people take tactical allocations, and I think broadly the opportunities are there from medium-term perspective. So yes, I think NFOs always tend to attract new customers, new investors, new folios. So it does remain in vogue, honestly.
Manish, you've been around for a while now. So number one, given the fact that equity markets right now are very buoyant, do you see the trend of NFOs continuing? Secondly, what kind of SIP numbers are you penciling in? And given the fact that, that is seen as more sticky, do you think it can continue to sustain above the 20,000 crore a month mark?
Yeah, of course.
Sorry, Manish, go on.
Yeah. Okay. So coming to NFOs, primarily, the thing is, mind you, it is just not sectoral funds where you've been seeing this huge surge of money coming in. It's a lot of thematic category of products also that people have been looking to launch. So maybe, in the Make in India theme, manufacturing India, like those kind of products. So it's a mix and match of sectoral thematic kind of products, which most fund houses have been launching. And that's where you've been seeing a surge coming in. The other thing what's happening is somewhere it looks like the investor is okay to allocate money lump sum through NFOs because the fund manager or the portfolio manager also has, a stipulated number of months available for him to build his portfolio and allocate. So maybe they feel a lump sum application through an NFO, will anyway get invested over a staggered period of time as the portfolio manager builds the portfolio. So that probably is a good approach. And when it comes to ongoing products, obviously SIP numbers continue to remain very, very sticky. And at least we believe very strongly that as awareness is, increasing amongst investors, I think these numbers can probably only head upwards. And as more and more investors are having a very positive experience of, investing in our markets through the SIP route, I think it's just giving them that much more encouragement to keep, using that as an approach to at least regularly invest and, at least ensure that there is a rupee cost averaging.
Okay. The next, of course, the important thing would be the net inflows in SIPs also, right? Because there were clarifications, there was a lot of discussions that the net SIP number has been going down. But Manish and Akhil, thank you so much for your time today and joining in with your first take. There's a lot of data to go through. So, of course, we'll do that. And at 2 p.m., we'll have the conference call from AMFI as well, where we'll get more details. And, of course, the systematic investment plan, the SIP number as well. Thank you so much, gentlemen, for joining in today. Okay, with that, let's move on.